Welcome to CSIS Online. The way we bring you events is changing, but we'll still present live analysis and award-winning digital media from our Dracopolis Ideas Lab. All on your time, live or on demand. This is CSIS Online.
Good afternoon and welcome to the Center for Strategic and International Studies. We're here for the online event on leading the developing world in digital financial inclusion. My name is Dan Rundy. I'm a Senior Vice President here at the Center, and I hold the Schreier Chair in Global Analysis. Even today, more than 2 billion adults transact on a strictly cash-only basis. Nearly 1.3 billion women, that's 1 in 3 women on the planet, are excluded from the financial system. The proper use of digital technologies can transform their lives while saving developing country governments $110 billion in tax revenue losses each year. Digital technologies can also benefit several developing world economies with high levels of informality, where millions of people lacking official identification operate outside of formal regulations and continue to be left out of the financial system. Long before the COVID-19 crisis, technological advances such as the expansion of the internet, the introduction of cell phones and smartphones, and the development of software applications prompted digitization in the financial services industry. The digital revolution has already transformed large parts of the world. As of 2019, millions of people were receiving wages and remittances directly in their bank accounts and managing their funds digitally without having to visit a bank in person. While several parts of the world have made progress, many developing countries still grapple with technological adoption and financial inclusion challenges. For the international community to fully close on these issues, stakeholders need to address individual countries' restrictive regulatory frameworks, weak governance capacities, insufficiently developed digital infrastructure, and other structural and socio-cultural barriers. Moreover, it is unhelpful to discuss global digital financial inclusion without acknowledging the growing influence of authoritarian actors in the international arena that threaten human rights, security, and sustainability. Through a year-long partnership with the Bill and Melinda Gates Foundation, CSIS examined the prospects and challenges of digital ID payment systems in expanding financial services globally. I'm particularly grateful to Dan Radcliffe and Dion Woods-Bell for their guidance and thought partnership as we unpacked our findings on this topic. I'm very thankful to my colleagues Romina Bandura and Sundar Ramanathan for their commitment and hard work over the past year in steering this project. I'm really pleased to be discussing our findings with a panel of distinguished colleagues. Before we get to them, I have the pleasure of introducing my friend, the first Deputy Managing Director for the International Monetary Fund, Mr. Jeffrey Okamoto, who will deliver some keynote remarks for this event. A thought leader and public servant, Jeffrey came to this job at the IMF in March of 2020 with decades of experience, having served as the Acting Assistant Secretary of the Treasury for International Finance and Development in the U.S. government, as Majority Staff Director for the Senate Banking Subcommittee on Financial Institutions and Consumer Protection, and Policy Director for the House Financial Services Subcommittee on Monetary Policy and Trade. Jeffrey, thanks for your willingness to speak with our audience.
Well, thank you very, very much, and warm wishes to everyone who's taking part in today's event. I really want to start out by congratulating all of those involved in the CSIS Project on Prosperity and Development for the really rich outputs that are being produced in this important area of global financial inclusion. Access to finance remains severely constrained in many countries. You can see this in slide 1, that a majority of the countries, less than 60% of the population, owns an account at a financial institution. And for women, even fewer have accounts. One of the first papers on the topic, written in the IMF, asked whether financial inclusion can help countries achieve higher growth and reduce inequality. And the answer was a resounding yes. Our research showed a clear connection between these two priorities. When a country goes from the 25th percentile to the 75th percentile in a common measure of financial inclusion, its marginal increase in economic growth is nearly 2 percentage points. Similarly, our research found that income inequality is about 10 percentage points lower in terms of the Gini coefficient in countries where financial inclusion is high. And we also found that financial inclusion can go hand in hand with financial stability, provided that the quality of supervision and regulation is high. Our latest research suggests that digital financial services hold the promise to further help achieve these goals. Digital finance is found to increase financial inclusion, complementing or substituting traditional finance. Digital finance is associated with higher real GDP growth, suggesting that digital financial inclusion could help mitigate the economic and social impact of the pandemic and support a more inclusive recovery. FinTech is closing gender gaps faster than traditional finance on average, although it varies a little bit across regions. In terms of opportunities, the pandemic could accelerate the shift towards digital financial inclusion. Looking at history for a similar episode, the SARS epidemic in 2003 indeed accelerated China's launching of digital payments and e-commerce. Chinese companies adopted e-commerce in response to the change in consumer preferences towards online purchases instead of in person. And this shift in consumer behavior also helped overcome the trust issue that they had with e-commerce previously. So if you fast forward to today, the adoption of digital financial services was already picking up speed prior to COVID-19, as witnessed by rapid growth in the take-up of mobile money and fintech credit, leading to greater digital financial inclusion. This trend will likely be enhanced by supportive measures governments have been putting in place in response to COVID-19, such as lowering fees and increasing limits on digital transactions. Some examples here include Liberia, Ghana, Kenya, Kuwait, Myanmar, Paraguay, and Portugal. Now, looking forward, to maximize the potential of digital financial inclusion, the government and the private sector have important roles to play. Both will need to collaborate to maximize the growth opportunities presented by digital finance. If it's done well, governments will be able to increase their citizens' real income. This is more important than ever, after a year in which IMF data shows that the standards of living in most countries actually declined. Through partnership, the private sector will be able to offer transformational products in new markets to more customers that will have higher incomes. We see this in some emerging digital money solutions in countries such as the Bahamas. It truly can be win-win. Now, to make this work, the agenda is quite clear. First, there needs to be sufficient investment in basic digital infrastructure. CSIS's work highlights the importance of adequate physical infrastructure as well as digital identity infrastructure and critical data on SMEs that private firms can use to construct a better ecosystem for startups. Second, regulatory frameworks need to be made conducive to facilitating the entry of smaller firms. A dynamic economy in which established players are challenged is in everyone's interest, attracting investment and creating better paying jobs. Third, developing human capital is key. Governments need to invest properly in education, particularly in the STEM fields, while the private sector needs to assist by investing in training those employees for that last mile on technical skills that are very specific to their business. The two need to go hand in hand, and this is an example where coordination makes all the difference. Fourth, the financial sector needs to be well capitalized and well regulated with an eye toward maintaining stability while also channeling capital to new market entrants. Of course, bringing in many new digital lenders and extending loans to borrowers new to the financial system who may not be able to pay these loans back could invite certain financial stability risks. But our research indicates that financial inclusion and stability can go hand in hand, provided regulation and supervision are sufficiently strong to prevent these risks from arising. Regulation can also help adoption, as consumers are more likely to trust products if they know they are properly regulated. Fifth, investors and firms need access to a sound and stable legal framework with a judicial system that supports property rights, including intellectual property rights. Startup investing is almost by definition one of the highest risk investments you can make, and it's difficult to attract it at sufficient scale if the private sector isn't clear on what their rights are or if they will be able to enforce those rights when needed. Now, at the International Monetary Fund, We want to do all we can to support countries during this transition. It starts with deploying our analytical expertise to help countries understand the amount of growth they could be leaving on the table by not acting now. Collecting reliable data to track and report progress is also pivotal for effective policy initiatives, and the IMF is contributing through the Financial Access Survey database. Now, I want to close by noting that the potential of fintech to democratize financial services can't be taken for granted. To deliver on the promise of fintech, the policy priorities we promote with our membership are to ensure equal access to digital infrastructure, greater financial and digital literacy, addressing data biases, data privacy, and consumer protection. So thank you very much for your time this afternoon. I really hope you all have a productive and inspiring exchange of views.
Thank you, Jeffrey. We now have a really interesting panel, some really important thought leaders on this issue of leading the developing world in digital financial inclusion. We have Ann Walwork, who's a senior counselor for strategic policy and innovation at the Office of Terrorist Financing and Financial Crimes at the U.S. Department of Treasury. Thank you, Ann, for being here. We have Mr. Michael Wiegand, who is the Director of Financial Services for the Poor for the Bill and Melinda Gates Foundation. We also have Kate Wilson, who's the CEO of the Digital Impact Alliance. We also have Alyssa Davies, who is the Global FinTech Policy Lead for Google. Thank you for being here. And then we have Ms. Wendy Teleke, who runs the Wi-Fi Secretariat at the World Bank. So thanks all 5 of you for being here today. Ann, let me start with you. First, thanks for your public service. I'm really glad when we have folks from the Treasury Department with us. So thanks for being with us today. So there's no doubt that the U.S. has security as well as strategic interests in leading financial markets and shaping the digital transformation abroad. What is the role of the U.S. Treasury in this area? And how does Treasury's International Anti-Money Laundering and Countering Financial Terrorism, which goes by the AML/CFT acronym, work on impacting digital financial inclusion? So why do we have you on this panel, if I could put it that way? How's that?
I think that's a great question to ask. Before I answer it, however, I need to give the standard U.S. government disclaimer. The views I express here are my personal views only and do not represent the position of the Department of the Treasury or any other part of the U.S. government. I'd like to thank you and CSIS for inviting me to participate in this panel with this very distinguished group of fellow panelists, and for your excellent work on digital transformation, particularly from my perspective on digital identity and digital financial services in relationship to U.S. financial inclusion, development, and national security objectives. I'd also like to express really deep appreciation to the Gates Foundation for supporting this digital financial inclusion project and other vitally important work to advance the domestic and global humanitarian and development agenda. Now, to answer the first part of your question, Treasury does play a leading role in shaping the legal and regulatory requirements, policies, and security controls for the international financial system to mitigate the risks and enable the benefits of digital transformation and to promote risk-based digital financial inclusion. We have very strong and wide-ranging equities in this place because of our mission to promote economic growth and prosperity, ensure the integrity, efficiency, and stability of the U.S. and global financial systems, protect national security, and facilitate financial inclusion and equity at home and abroad. We exert our leadership role and drive international cooperation to support responsible digital transformation and financial inclusion globally through our work at the global financial sector standard setting bodies such as BIS and the FATF, our other international organizations in which we participate, and through very robust bilateral engagement as well as bilateral technical assistance. We also leverage our convening power to to host events with foreign counterparts to advance our policy objectives and strategic goals. For example, in February, Treasury hosted a virtual two-day financial sector innovation policy roundtable attended by almost 400 participants that brought together U.S. and foreign policymakers and regulators with private sector experts to exchange views on policy and regulatory issues and ways to collaborate on leveraging innovative technology to strengthen financial sector integrity and financial inclusion. As to our impact on digital financial inclusion, the department has numerous work streams that impact this area globally. And I'm acutely conscious that if my colleagues from International Affairs were here, you would get deep dives into their efforts. I am intending to include them, but let's focus now, as you asked, on AML-CFT, where we are an important member of the global standard setting body, the Financial Task Force, or FATF, which addresses how we can best counter money laundering, terrorist financing, proliferation financing, and other illicit financing threats. And in this body, we lead the FATF's digital transformation and financial inclusion work streams. In that capacity, we played a leading role in promoting the importance of financial inclusion to the FATF's AML-CFT mission. And we've also been instrumental in encouraging the use of the FATF's risk-based approach to customer due diligence and the responsible use of innovative technology to advance financial inclusion. Customer identification and verification of customers' identity at onboarding, for example, to open an account or to obtain a loan, is one key element of CDD. Industry commonly uses the term Know Your Customer, KYC, to refer to customer identification and verification at onboarding, but they also use it to refer to other elements of CDD occasionally as well, which includes identifying beneficial owners and understanding the purpose and intended nature of the business relationship and conducting ongoing due diligence with transaction monitoring on that relationship to make sure that it conforms to the financial institution's understanding of the customer. In the FATF, to advance financial inclusion goals, Treasury staff helped draft the FATF guidance on AML-CFT measures and financial inclusion with a special supplement on customer due diligence. That was issued in November 2017, and it explains how the risk-based approach to CDD permits countries to adopt flexible CDD in response to risk, including, and this is very important, simplified CDD in proven low-risk situations explicitly to support financial inclusion. We encourage countries to adopt this approach in our work in other multilateral fora and in our bilateral engagement. And we are completely committed to the notion that AML-CFT and financial inclusion do go hand in hand. Very importantly, Treasury staff also spearheaded and was lead drafter of the FATF guidance on digital identity, which was issued in March of 2020. The guidance covers individuals, not entities, and takes a risk-based approach to using digital identity solutions to conduct customer identification and verification at onboarding, and also to authenticate existing customers' identity as part of financial institutions' decisions to authorize account access. It explains how to leverage digital technical identity technical standards and trust frameworks such as the U.S. National Institute of Standards and Technology, or NIST, digital identity guidelines, and the EU's EIDAS framework to determine whether a given digital identity solution is sufficiently trustworthy given the potential money laundering, terrorist financing, fraud, and other risks that need to be addressed. The guidance highlights several ways using digital identity solutions for CDD can support financial inclusion. It makes clear that remote onboarding and transactions are not necessarily higher risk and may even be, and are standard risks and may even be lower risk if they rely on trustworthy digital identity solutions assessed using this risk-based two-step approach.
And I'm just cognizant of the time. I want to bring some other folks in. So
Absolutely.
Let me come back to you a little bit later, but this is great. So we have to balance inclusion with understanding who's participating in the international in access to finance. There's a balance here, and that's what you're getting at in terms of trying to set the rules of the road, right? That's what's going on.
Yep, that's the proportionate risk-based approach. And it's really important for the development community to understand we're on the same page on that.
No, thank you. And it's really important. I wanted to bring in the cops side of this, the regulatory side of this, because often I don't think one of the goals of this was try and bring different communities together. And so we really appreciate you being here. This is great. This was perfect. That's perfect. So Michael, thank you. You're the Director of Financial Services for the Poor at the Bill and Melinda Gates Foundation. Michael, could you tell us about your experience working with country-based and regional implementing partners in expanding financial services, as well as how you've seen open source solutions catalyze these efforts?
Yeah, thank you, Dan, and thank you for hosting this event and being a great partner to the Gates Foundation in this important work. We work across a variety of areas, including policy and regulation, to enable financial inclusion, but have long focused on digital public infrastructure and payment systems, interoperability platforms, and national ID systems being the two main examples. And ultimately, these are implemented at the country level. We have 9 focus countries, most of the largest populations of excluded individuals that we work with directly. So let me speak a little bit about the role of open source and then come back to the question on regional approaches. We support the implementation of digital public infrastructure in these countries, both using proprietary systems and open source systems. But we've helped support the development of open source payment platform called Mojaloop and an ID platform called MOSIP that's really getting increasing interest. And you see a number of countries who are choosing to go the open source route using these platforms. And we see 3 real benefits. One, and the most obvious, is it prevents vendor lock-in. You do see really stark differences in the cost of ongoing use of particularly ID systems between sort of proprietary systems. The cost of the hardware that's required for biometrics, for example, can be 10 times for a proprietary fingerprint reader versus one that uses open source technology. So there's a big advantage there. The second is that there's the opportunity for countries to really take ownership. And oftentimes countries have taken an open source approach across multiple government platforms. They build local IT capacity, but really can sort of protect these sovereign assets that they're building. And we see that's an increasing priority for countries. But third, there's an opportunity to really leverage the open source in terms of learning from each other. So as one country adds new capabilities, say to an open source ID system, that can be shared with their neighboring countries. We've got leading academic institutions around the world, in the UK, with the Turing Institute, to drive cutting edge thinking on privacy, cybersecurity, and so forth. And the fact that it's open source allows that kind of contribution. And we're seeing this regional desire to both support the implementation of digital public goods, but also to look at interoperability. And we see that as a growing trend. We're working with several regions in Africa to enable interoperability of payment systems and ID systems.
Great, thank you, Michael. So let me bring in Kate Wilson. You're the Chief Executive Officer of the Digital Impact Alliance. Kate, the Digital Impact Alliance has been leading efforts to integrate digital transformation with global development. how do you balance the risk that was talked about or referred to or implied by many of Anne's helpful and thoughtful comments? How do we balance the risks imposed by new technologies, privacy, data protection, identity theft concerns with development gains?
Thanks so much, Dan, for inviting me and for hosting the excellent series all year. It's been a pleasure to work with you all. And I want to pick up both on what Anne said as well as what Michael has sort of built on, sort of discuss this. So when you think about what's needed for a national digital transformation, so let's think about the countries which are involved and really sort of take that country view. They're really looking at how can they take a full view of the national digital public infrastructure that they need to put in place. So Michael introduced two of those critical aspects of two products that are really required: digital ID, as well as a digital payments layer. We also think that there's a data layer and a security layer that comes in part of this, and that building trust in that system is pretty incredible and really required in order for any of these systems, whichever permutation of open source products they may choose to put together, go together, you're going to have sort of an interaction with your society about how to do that. So let's talk about sort of taking that whole of society approach. It requires that the government itself actually engage, but also civil society is brought to the table directly from the beginning. You have to prioritize and invest in careful risk-benefit analysis about the DPI structures that you are intending to put in place, and you need to invite regulators to be with you along the way, because the private sector is only also going to engage in this to support overarching applications that may tie into this if there is actually this careful risk-benefit analysis, and they're also assured from a regulatory framework that it can actually last. Second is that then supporting the approach of appropriate legal frameworks that can actually really underpin this. Over and over again, we see some of the main challenges are in the fact that the legal frameworks where we are supporting these systems to go in actually aren't in place or can't keep pace with what we've actually done. So I thought what Michael emphasized really on sort of the policy and legal framework that has to accompany the deployment of the products was actually pretty critical. The last thing I'd like to just sort of look at is how can you invest in sort of, and it's something we don't talk about very often, but I think is pretty critical, sort of the evidence and the feedback about how it's going in the places that we've done. And this ties to Michael's last point about DPI, which I think is about how can countries learn from one another. What we found over and over again is that countries who are undertaking their digital transformation, no matter where they are in the world, they're looking to others for examples. And so the extent to which we can test something in India or a Morocco or a Philippines, learn from it, and then employ it someplace else actually will make this move so much more quickly. So I think it's tying into, having the right DPIs or products in place, really putting in place the policies that are actually going to support that with civil society deeply engaged. I think third, about how those systems are procured and making sure, as Michael was sort of listing, that they actually can be open and then become interoperable with one another, and that you can build upon them. And the last piece is really looking at investing in the people who both have to design them, regulate them, and use them long term. And I think if you put together sort of those 4 Ps and take into account the political infrastructure which somebody's going, you can do a lot. Thanks.
Thank you, Kate. Okay, Alyssa Davies, thanks for being here. I really appreciate it. So Alyssa, Google has worked in multiple countries in shaping and growing their digital payments system, but your biggest success so far has been with India. What are lessons learned from Google's partnership with the Indian system?
Thanks, Dan. And really interesting to hear from the other panelists about the different experiences you've had in different countries. But as you say, I think a really instructive example for us to look at is in India, where, as you highlight, Google Pay has had significant success in the last few years. So I think the key things to highlight from our India experience were that we worked in very close partnership with the National Payments Council of India and the Reserve Bank of India, as well as with the top 4 Indian banks. So we built our instant payments product on top of the real-time UPI system that was being built by those government and regulator partners. And so as part of that project, we engaged very heavily with the underlying design of UPI, of that real-time payments network itself, and with its design challenges. So as you note, Google Pay saw tremendous growth in India. So within 18 months of launch, we had over 45 million monthly active users. And I think interesting to note that the types of users is very diverse. So it's used across 300,000 cities, towns, and villages in India. And 2 out of every 3 of those transactions take place outside the top 7 metros. But I think in addition to the success of GPay, it's also interesting to note the growth of the digital payments ecosystem as a whole. So since the launch of Google Pay, the number of UPI transactions in India has actually passed the number of credit card transactions. So obviously a system that's been in place for over 30 years. So I think really showing the potential of a really well-designed digital payments infrastructure to transform the way that people make payments. So I think overall, it's just a great example of where a partnership between banks, governments, and tech companies has really benefited the whole ecosystem, especially consumers. And so that is something that we really want to take forward as we work with other central banks and regulators in other markets.
Thanks a lot, Alyssa. Wendy, thanks for being here. The global pandemic has undoubtedly disrupted development plans across sectors while accelerating digital transformation in several countries. In that context, has COVID-19 worsened the gender-based financial gap?
Thank you, Dan, and it's really great to be here. Thank you to you and to the Gates Foundation for organizing this great series of events. It's been a pleasure to be a part of them. And great to hear from the different panelists, as well as Jeffrey, who has been a real champion on inclusion and gender issues from even before he was at the IMF, when he was the chair of WIFI, of our governing committee. So it's great to have him here too. Just to get to your question about the financial gaps for women, since we all love data, I have one data point I wanted to share that I think really answers the question. It says it all about the impact of the crisis on women entrepreneurs, which is really what WIFI focuses on. And that's a recent piece of data that came out of the World Bank's Enterprise Survey that showed that during the pandemic, loan applications from women-led businesses were rejected at twice the rate of men's loan applications. So 14% of male applications were rejected, while 30% of female applications were rejected. And this only represents the businesses that applied for loans. We also know that women are generally more cautious about taking on debt. So, you know, if they're not asking, that the differences in terms of how they're getting financing could even be more stark. And this really validates a lot of the concerns we've had over the last year and a half, that COVID is setting back progress that we really felt like we were starting to make on gender financial inclusion, as many banks and financial institutions are reverting back to their traditional, usually male client base. At the same time, on the operational side, women have been especially hard hit by the COVID crisis. They traditionally have been smaller, they've had lower margins, and they're concentrated in sector service and care sectors. There were difficult business sectors previously, but have really been hit hard by the crisis. And because of the care challenges and the way that their sectors have been hit, women-owned businesses have just been hit really hard on the operations side, with greater disruptions to supply chains, closing down for longer periods of time, and laying off more workers, which of course are disproportionately more women. So it has a knock-on effect on women's employment. And, I think the general feeling we're seeing is that, if we've made some progress before, it's now either stalled or regressed over the crisis. Two silver linings that we see in the data is that government stimulus programs, when they've reached small businesses, they have reached women and men equally at equal rates. And also for this conversation, women seem to be more likely, about equal, but maybe marginally more likely to pivot to digital models than men. So what we see is women adopting digital technologies as a way to pivot, maybe because they're doing more work from home, they're balancing their other responsibilities, and they see that this creates a good opportunity for them. So at WeFi, we're spending a lot of time, and I can talk a little bit more about that later, on trying to think about what types of interventions we need to do to reach women. But the bottom line is, when you look at fintechs, you look at the digital platforms that are out there, even though, to Jeffrey's point, financial inclusion benefits women generally, and digital financial inclusion in particular. But what we see when we look at the institutions, the types of organizations that we work with, is that they're not really looking at the female market and trying to understand how specifically to reach them. And therefore, there's a lot of inclusion that's not happening. So we think we're still lagging. They're not looking at the data. They're not, even though of course fintechs have a lot of data, we don't see them actually using the data to understand how to serve women better. Surveys have consistently shown this. And they're not using that data to design products and services that could really serve the specific needs of women. So while there are some good examples, some great examples of groups trying to do more in this space, it's really still just a drop in the bucket. So there's still a long way to go. And I can talk a little bit more about some of the interesting things we're seeing on the operational side later.
Great. This is excellent. When we did this project, which was about digital financial inclusion, it struck me there were sort of several circles to the Venn diagram. There was gender, there was digital ID, there was financial inclusion. I'm going to call it national security, were sort of the different worlds we were trying to mash together. And there was a hope that we would have more digital ID that was safe, and that there was more digital payment systems that allowed for men and women to fully participate, and all people to participate in their economies, and reduce, even if they're in an informal economy, that payments would be something that they could access. They could participate in banking systems, et cetera. So could you each just think about, let's just fast forward by 5 or 7 years, what's the world that we want to see? What does success look like 5 or 7 years out? And what doesn't look like success? Because it seems to me like the conversation we just had isn't sort of the only scenario, or kind of the only world that could happen. I'm being a little bit subtle and nuanced here, but I think we could see there's another set of outcomes that we could have that may not be so great. I could think of a couple. So could you each just think about, if we look out 5 to 7 years, what's the world that we want to see? Maybe I could start with you, Kate Wilson, if you could just, if I may, just think what's the world we want to get to? And I could ask each of you very briefly to talk about that. And then I want to come back to, okay, if we want to get there, how do we bring in the U.S. government? How do we bring in multilaterals? What's the role for all those folks? So, but let's just start okay, where do we want to be 5 to 7 years from now in this conversation? Kate?
Really hard question. Then I really am delighted I get to go first, by the way.
You are so welcome. You are so welcome. Thinking the deep thoughts at the think tank. You're welcome, Kate.
Fun question. So, I mean, the way we tend to look at it is I truly believe that we, as the international community, are still completely committed to the SDGs, right? So we are trying to reach everyone everywhere. The tools we're going to use are really digital solutions and data use. Those two things will be two of the critical enablers, as we have seen over the last 18 to 20 months, to actually accelerating that path. Now, to get there, I truly believe that all countries, I don't tend to distinguish this by upper income, middle income, or lower income, but all countries are on this digital transformation journey to actually make that happen. And in order to do that, they essentially need to have the right products available at the right point in time. They need to have the policy infrastructure in place that then enables, but also protects. Mm-hmm. They need to consider how they're actually procuring those and really making it easier. Because let's be honest, this procurement actually messes up a lot of these and makes it very hard to get the right pieces in place, and then having an ongoing structure for them. And then they need to have people, from policymakers who are designing the systems or to implementers and technologists to the people who are actually using the systems actually have deep digital literacy. The global community is investing in each of these. We're also investing in each of those products. They've recognized all of the same things that I've just laid out. And many organizations such as the Gates Foundation, USAID, and other entities of the US government, as well as French, Germans, others, have really seen this and have seen sort of the power of it. I think what we're struggling to do is align those efforts and kind of really ground it in this national digital transformation and the digital public infrastructure, as Michael highlighted, and the digital solutions that on top of that then plug in and make a seamless society. So I think it's hard to, we talk about this, it's lots of words and stuff. So I think where people have really seen this is when they really think about country exemplars. So you look, for all of its challenges, you look at what India has been able to achieve, which Alyssa highlighted clearly, and Nanda Nilkani will brilliantly describe exactly how this is going to happen. You look at an Estonia where they were able to, in 24 hours when the pandemic flipped, turn everything to a digital solution because they already had the investments in place. So there are many different types of models that could be followed, South Korea, Singapore, et cetera. There is no one size fits all answer, but there's probably not 194 different roadmaps. So if we can align our investments and actually pick a few more specific examples and try to really learn and dig into those differences as a community, I think we can align our work. Thanks.
Okay, thanks for being a good sport and taking my deep thought cold question and coming up with a great answer. So think about some models we can replicate is one thing. Alyssa, could I go to you? Certainly India is one of those models, but where I worry about, there's a risk that if the international system doesn't collectively work towards a certain goal, we could have a different kind of an outcome, either an outcome that doesn't respect values and sort of an open system, or sort of what I would describe as a big brothery kind of a deal. Or that's kind of one scenario. Another scenario is you just have several billion people still unbanked if we don't get this right. Alyssa?
Yes, so we definitely agree with everything that Kate said. And I think that last point about sort of choosing the learnings from certain models and then trying to implement those is important. So I think on the India model, the way that we have always thought about it is about putting the user at the center of everything. And so really making the user experience the core, because that's how the system scales and that's how you drive adoption on the scale that we've seen in India. So I think as a technology company, that's what we would really put at the core of this. I think just to build on what I was saying earlier, really important to do that is having this partnership between the regulators and governments, the tech companies, and crucially the banks, because I think often we think about some of those different parts of the ecosystem as being in conflict with each other, but actually having that partnership is so core to making sure that everyone in the ecosystem benefits. So I think having the consultation between those different parts of the system, we, for example, are working with lots of different central banks and banks, whether it's in Brazil, in Mexico, in Thailand, in Malaysia, and whether it's on real-time payments, whether it's on open banking, but really making sure that the whole ecosystem is being consulted as those critical pieces of digital payments infrastructure are being built.
Got it. So Wendy, where do we want to go? Where do you want to be? Where do you want us to be 5 to 7 years?
Yeah, it's a great question. For us, we're really looking for gender parity in entrepreneurship. We want women to have the same opportunities to, become entrepreneurs at the same rate as men, which they don't today, to be as productive and to grow as quickly and as healthily as the other businesses in their economies do. We see really the need there to, of course, close all of the digital infrastructure and payments gaps and make sure that those are all available to women equally to men. But once it gets into getting products and services out to women entrepreneurs, it really starts with having better data and really getting financial institutions to track disaggregated data, and for regulators also to know what's happening in terms of financing for women. We've seen a great example in the UK where they've instituted a voluntary code called the Investing in Women Code, and now over 100 financial institutions in the UK are tracking their lending to women-led businesses for the first time any country's done anything like that. We think that's a really promising model that we could use elsewhere as well, and take the example there and roll it out into countries that have, different ecosystems, but also need to serve their women entrepreneurs more effectively. And to do that, we need to work with investors, we need to work with regulators, we need to work with the financial institutions themselves, and we need to work with the fintechs and other technology providers, because many, of the solutions that we'll see with financing, getting better data and getting better mechanisms out to women entrepreneurs are going to come through technology. So we know that's really where the future is.
Great. Michael, where do you want to, where would you like us to, where do we want to be 5 to 7 years from now?
Yeah, and we really still are in the early stages of scaling these digital public goods around the world. And there's a little bit of a tension of continuing to allow innovation and entrepreneurship and new types of models, but also getting some degree of standardization. The example in India where NPCI enabled non-financial institutions to initiate payments, and that would enable Google Pay, just created a whole nother layer of competition and innovation, right? That's something that would be great to be ported to other countries so that Google and other companies don't have to come up with completely different business models and approaches country by country. So it's that balance, and that's where I think also, as Kate pointed out, bringing some best practices around cybersecurity, other protection of data, privacy, and so forth, which is critically important. These platforms are really powerful, but there are risks. And then as they start to be scaled and somewhat standardized, leveraging them for cross-border. As Anne said, being able to authenticate a cross-border payment for both beneficiary and sender in a digital way that's super low cost, but also much more effective at preventing sort of dangerous transactions. But ultimately, one thing that's really important, and I want to build on what Wendy said, we need to really take a gender focus. I think there's a sort of sense of this is all plumbing, this is infrastructure, it's gender neutral. The fact is that the financial system is sexist. It leaves women behind, it leaves them excluded, and those that are included are disproportionately harmed by fraud and other risks. And so as we're implementing these systems, prioritizing use cases that are most important and most relevant to women, understanding the risks and harms that women are bearing under these systems, and making sure that we solve those first as we protect the risks, and really design systems that work for everybody. Right? We have probably stolen the phrase, when you design for everyone, you really design for men. Well, we want to design for women, and it'll work for everyone. But it's something that's starting to gain interest, but we have a lot of work to really educate the world of what it means to design these systems to really work for women.
So Anne, the good news is we're thinking about digital inclusion and digital transformation and financial inclusion in digital, but that's all well and good unless we have cybersecurity, and it's all well and good unless we have anti-money laundering. It's all well and good unless we've got know your customer. So there's a whole bunch of stuff and rules that are going to have, and safeguards that have to go into this thing. It's not just, it's right there. There's a reason why we had you on into this conversation, is because you can't just, there's some rules of the road, if you will, that have to be established, and some guardrails. So where do we want to be 5 to 7 years from now, given this conversation we've just been having?
Well, I think we would definitely like to have trustworthy digital identity solutions that we can assess against global standards. And by trustworthy, we mean privacy preserving, secure from a cyber attack perspective and a data protection perspective, consent-based, user-centric, and to do that, we're going to have whether the solutions are private sector provided or government provided, we're going to have ways of working together to map what the assurance levels are for different kinds of digital identity solutions and how they can be used to facilitate, for instance, cross-border payments and cross-border onboarding of customers. I think one of the other things is the whole idea of how do we get cross-border payments in the digital world to be cheaper, faster, more efficient, safer, and inclusive. And there, I would like to flag the work in which Treasury participates of the Financial Stability Board in their cross-border payments initiative, where the BIS Committee on Payments and Internet and Market Infrastructure and the standard-setting bodies are all working together to develop a set of building blocks and now a set of a roadmap with an actual plan and commitments to help us get there. I think that's very important. Also, having I think the FATF, especially with its, the standards were revised in 2012 to emphasize a risk-based approach. The FATF was actually recognized as the first standard-setting body to include consideration of financial inclusion as part of its mission, and it has a very robust digital transformation work stream that Treasury helps spearhead. So I think that the global anti-money laundering, counter-terrorist financing, and now counter-proliferation financing standards really are being continually updated to address digital transformation. But it's really important that we have all countries around the world implementing them so that we have level playing fields. We don't have regulatory arbitrage. And this has really come to, I think, a crux in the context of how we regulate and address the global standards for digital assets, which are sometimes known as crypto assets, and in the FATF, they call them virtual assets. So certainly one of our top priorities at Treasury is to achieve global cooperation in addressing the significant money laundering and counter-terrorist financing and proliferation risks of digital assets, including ransomware. And we can get into how we're doing that later.
Excellent. Thanks, Ann. All right, so we only have a few minutes left. So Financial Action Task Force, the Bank for International Settlements, the Financial Stability Board, the G7, the G20, OECD, CGAP, We5, ITU, right? There's a whole bunch of these. I mean, you guys could each name like 2 or 3 more, right? So there's a lot of fora. So philanthropy can only do so much. Ultimately, there's a unique role for countries in making this happen. So I guess the question I'd put to you, and Ann, it'll put you in a little bit of an odd situation, so think about this, but what's the role of the U.S. in all this, or what's the role of multilateral institutions in all this? So maybe I could start with you, Alyssa, if you could think about like where's the U.S. play or where the multilaterals play. Each of you gets sort of a minute to 90 seconds to think about this specific thing, because it seems to me we've got some challenges we've talked about. We've got kind of an end state. There seems to me there's a unique opportunity for the U.S. government, in my view, but also sort of OECD countries or countries with shared values in moving towards this goal? So let me start with you, Alyssa.
I think I would just emphasize interoperability, which has obviously been something that we've touched on throughout this panel. But I think that the US has a really important role to play there in ensuring that the systems that are being developed in different countries are able to interact with each other, and crucially, that we're learning from other countries' experiences.
Wendy?
Thanks, Dan. That's a great question. We've been looking at the world of who's supporting entrepreneurs right now, and it turns out there's just not enough being done given the gaps that we have in the market. And the U.S. government has been a leader, not only in supporting WE5 with a really generous contribution when it was created, but there's many other programs like things that are done by USAID or the Development Finance Corporation to support women entrepreneurs. But we really see the value of having this kind of ecosystem approach when working on private sector issues that have regulatory elements. So working through the multilateral development banks has been just incredibly effective for us in deploying those donor funds out into the markets, because we're able to work with the regulators, work with the policymakers, work with the private sector, the banks, get blended finance out to the financial institutions, train the women, train the institutions, and have that all work together in one piece. And I think because we work not only through the World Bank where I sit, but with IFC and then the 5 regional multilateral development banks, we're able to get a global scale that's really, unmatched. We'll be, I think, in about 50 countries now, and working with over 100 partners. So, really supporting that kind of ecosystem approach, I think, is really important, and also fostering the kinds of partnerships that we can have with others working on the ecosystem, also in our markets. So there's still a huge amount to be done. But we're making a good start.
Good. Michael?
Yeah, well, one, I would commend U.S. Treasury and the leadership they've taken in working with FATF to modernize the way that the world does AML and CFT, to leverage these technologies and not make it exclude the poor, where there was a real risk of that. Beyond that, we are seeing a real interest in the U.S. government in driving digital public infrastructure across the world. We think that's fantastic. An area where they're particularly providing leadership, and I think a lot of sort of the intellectual leadership around cybersecurity exists in the U.S. and U.S. Academic institutions, but also in the government. And we see that as an area where they can really provide leadership and support making these systems safer around the world.
Anne?
Well, I agree with everything that's been said so far, and in light of time, I just want to emphasize that we need to pay attention to the to supporting democracy and technology versus digital authoritarianism. And in December, President Biden will bring together leaders from a very diverse group of world democracies at a virtual summit for democracy, to be followed in a year by a second and hopefully in-person summit. And the Summit for Democracy will galvanize international commitments and initiatives across 3 principal themes: defending against authoritarianism, fighting corruption, and promoting respect for human rights. And importantly for this conversation, it will include highlighting the potential of innovative technology to advance these themes, and it will seek commitments both from developing countries and developed countries to drive international cooperation, to leverage technology that exists to advance democratic goals and values, but also to work together in very creative ways, leveraging both the roles and equities of governments, but also the talents of the private sector to develop and implement additional innovative technologies. And in that regard, one of the things that will be happening at the summit is looking at the role of technology in combating corruption. And then in the spring, Treasury and the State Department with other international partners will be conducting technology development efforts, and there'll be more announcements about that later. But it's the kind of thing that the UK, with its Financial Conduct Authority, has really led the world in. There's now a global partnership for GFIN, Global Financial Innovation Network, for regulation in this space. And that's another really important vehicle where countries can really come together and look at how we can build technology that is transparent and that serves the goals of everyone.
Great, thank you. Kate?
I want to build a little bit on Anne's point about the Summit for Democracies. I think that the U.S., in gathering those democracies, has a real opportunity to actually build on top of its endorsements on the principles for digital development, which we are a steward of, but 270 organizations and many country governments are already incorporating into their digital design, and really think about sort of a digital accord, which are a set of standards and principles that democracies should consider, sort of building on the work that's already been in place. Second, I'd encourage them to think about, supporting country institutions to look at different models of policy, laws, and regulations. That political and policy framework is so critical, and we don't spend enough time on it. Third, really encouraging investment, co-investment with other governments in digital public infrastructure and how to actually tie on top of that. A number of organizations have been looking at this and thinking about it around the world, and I think it's time to bring those financing efforts actually together. And then last, but certainly not least, I'd really encourage us to start thinking about how we can act as a model for sort of cultivating societal approaches and discussions and debates actually on what it means to build digital trust in a government. I've seen this in a number of other countries. I have rarely seen it in my own. And so I would welcome seeing that type of debate take place. Not in the newspapers, but just with digital is here to stay. Let's figure out how to make it work for all of us.
Thanks, Kate. What a great conversation. I do 60 of these events, public events, a year. This was really interesting. A lot of different perspectives. I really appreciate you all bringing your views to this complex but really important conversation. The stakes are really high. It's clear that we still have a lot more work to do. It's clear to me that American leadership is critical in making this happen. And obviously CSIS is happy to participate and be a catalyst to helping get to this outcome that we want 5 to 7 years from now. I want to thank the audience as well for tuning in. If you want to unpack this more, you can find our complete analysis at the CSIS website under the Digital Financial Inclusion tab. I think we'll end it here. I want to thank the panelists. I want to thank the audience. Thanks, everybody.
Thank you.